Hello. With the popularity of zero DTE trades, I thought I would just review the trades today and talk about the adjustments I made and why I made those adjustments. We'll start off by just a little about what I do. When I fill an order, I copy the trade from the field orders down here, and I paste that into. I just do this. I go analyze trade, and it puts that trade into my analyzer, and that way I can see it on my screen here. I've also set today is the 10th to show where the trade is at expiration, but I also have adjusted the price right here to what the price was of the SPX at the time that I did this trade. So what I initially do is I try to put on a fly right around at the real close to at the money, and I try to do that within maybe the first 5 minutes of the market open. So I'm also gonna, I guess I ought to bring this chart over here too. And if we zoom in, I think what I'm gonna try to do is just show where we were. So as this shows the opening breakout range, these brown lines here for the first 15 minutes. And the first bar, almost first 5 minute bar, pretty much covered that range. And so we got in at a fly at 43.40, thinking that it might revert back to the close instead of the 43.45. And this is what that trade looks like, 43.40. And we got $21.85 credit for it. And we can see that again in the filled orders, or we can see that back in the account statement, or we can look at the trade history, and that trade is this trade right here that is highlighted. Okay, so what happened is that as the morning went on, price started going up, and at 9 o'clock, the price was at, went all the way. You can see that it's gone all the way up here. So we'll put this in here. So here's 905, somewhere around here. So we went to the top end range of our current fly, and let's say that it went up to 55, but it was probably around 50 when we made the adjustment. So what we're trying to do is put these flies 15 points apart. Gets about 50 or slightly higher, or it just looks like it's going to keep going up. I may put that on earlier, but it was probably put on about at 43.51. So we added that second fly. So let's add this to our trade. So the expiration curve, the blue line right here, is what it looked like at expiration. This magenta line here, or I'm sorry, this pink line, whatever color that is really not reflected correctly, since that trade was earlier in the morning, and these option prices are different. So we were probably in a hole slightly at this point, not at a profit. But we were centered more. So if we were right around 51, 52, our price was pretty much in the middle of this tent here. Our next adjustment point is if it exceeds this short right here at 43.55. So if it goes up, what we're going to do is we're going to take half of the position at 43.40 and roll that up to the 43.70. So we move it up 15 points, and it's kind of hard to reflect that on the chain because we don't have any of the trades on the chain. But here was the first adjustment. I'll put that in there, and that was at 9:05. So it happened pretty fast. You can see from this right here that price was moving up pretty fast. So at 9:05, we were at 43.55. We were up here at the top end of the second fly, 43.55. And what we did is we took half of the 43.40 and rolled it up to the 43.70. And what we roll up is the one that we want to increase the position size. So I don't know if this will reflect right. Okay, so what we wanted is more positive delta. And again, this is not very reflective because of the price changes that have gone on. But you can see how that adds more delta when we do that trade. So what we're doing is we're just rolling those puts from the 43.40 up to the 43.70, which increases the negative delta, but since it's a short trade, it increases the positive delta, which means that we want the price to go up more, or we're playing at a higher price. So let's say that right now the price is at like 43.55. I'm going to adjust this to 43.55 here. Show you what that looks like. So with that adjustment, you can see now that we're at the center of our profit tent. And sometimes I think of this as a ball bearing on top of a bowling ball. It's really hard to balance it on the center. And once it starts getting off center, it can fall down in the hole on either side. So, if you're constantly trying to balance it in the center, you're going to be spending money to try to balance it in the center. And any move is going to make you lose money. Sometimes you want to be ahead of the curve. And so what you might want to do is, if the price was, see, here's a case where before this adjustment, you can see that we were getting very negative and wanted to raise that up. We want to get it balanced, or possibly if we think the price is going to continue higher, we would want to, this looks like a very positive bias market right now. We might want to even over adjust that so that our delta now becomes positive and we make money as the price goes up. But instead, set it back to a neutral value, because most of the time it's best to assume that you don't know what the market's going to do and not try to bet one way or the other. Well, as we continued on, the market started making these big highs. These are 5-minute bars, and that's a big bar, big move, and we're already a long ways off from our opening price, which our opening price is right here at 43.40. And so we're already up at 43.60, so that's already a 40-point move up. Let's adjust this back to 60. And you can see we're already starting to get to the right side of this curve, and if price continues to go up, we'll continue to lose some of our profit. Or, if this pink curve at that time is way down at the lower point, we may be losing, our losses may be just getting bigger. So let's see what happens next. So our next trade is going to be at 10 minutes later, 9:14. So let's get the 9:14 here. So that's just another 5-minute bar is all it is. And we went up even higher. So we're up now at 43.62. So let's bump this up to 62. And you can see we're starting to get a lot of risk here. We have a strong negative delta, which means we want the price to go down. And you can see that because we have more profit right here than we do currently where we are. And if it goes up, we're going to lose value in the trade. So what we do is we went ahead and did another roll. And what we did is we rolled the 43.55s this time. First time we rolled the 43.40, and you can see the 43.40 here. This time we're going to roll the 43.55 puts. We're going to roll those up on top of the 75, so it would be the 85, which is this trade right here. So that's the 55 going to 85. We move that up 30 points, and we get another $18 of credit. So, we're adding more and more credit onto this trade, so it's not costing us anything. It's keeping our profit tent just as wide as we were originally, pretty close. And we've balanced out our delta again. Our delta is closer to zero. I consider with 3 contracts, anything less than 150 is okay. Less than 100, I prefer. Less than 50 is basically balanced. It's zero. So plus or minus 50 would be pretty much on the top of this curve here. Okay, so next thing that happens is that, now we're requiring $100,000 of buying power. Well, that's a lot more buying power than I want to use. And if I have to make another adjustment, I will not have enough buying power to do that. So I decided I was going to go ahead and roll our longs up closer to at the money. And our longs we put on a 42.60 and 42.70. And so the next trade we'll do is at 927. 927. Let's see where we are at 927. Go. So here's approximately 927. So you can see that we've gone up some more. I'm going to change that to 43.65 now. Gone up some more. We're on that side. And we're going to roll the puts up. First put is this one. And this is rolling the 42.60, which we put on the first trade, up to 4,300. And you can see what that does to our delta right here. I'm sorry, our buying power. We're at $100,000 of buying power. And we do that, and it drops it down to 88,000. So it knocked off $12,000. And about 5 minutes later, well, almost 10 minutes later, we're rolling the call down. This is taking the call from 43.40, which was our original short call, and it's paying to move it closer to at the money. So we're about 936. Go on a little further. 936, or let's say 43.68. Go up to here. 43.68 now. So we're pretty close to the center of this. When I roll that long call towards at the money, if you look at our theta, we were at 2,500. When we roll that in, it brings it up to almost 4,000, 3,900, something like that. But look what it does to the delta too. We were negative, meaning that we wanted it to go down, but now we're positive. So that increases the delta also. It makes us more positive biased. Well, we've been going up, and this pullback might have been the opportunity where we did that, maybe did it at a lower price to be able to get this price for that roll. And you look at too, we've also rolled up 30 points, and it only cost us 20 points to do that. So at expiration, that we're kind of saving 10 points if it settles above this. If we go below the 43.70, that's a bad bet. We would have been better at 43.40, but above 43.70 at expiration, rolling that up to here saves us that $10 or $3,000 of costs that would have costed by expiration. So let's continue on this trade. The next adjustment we made is at 10.12, and let's see what the price was at 10.12. So we'll advance this a little more. There's 10. Okay, so this is about 10.12, I think, 10.10. So the price did continue going up. So that was a good bet we made when we rolled that call back closer to at the money. So now it's 43.74. So let's go back to 43.74 and see what this looks like. And you can see now that we're still in a good spot on this this profit target, this profit tent, and we're going to do our next trade here, which is our original calls that we put on are getting closer to being at the money, so they have some value on it. And what I wanted to do is I wanted to capture some of that value on those long calls, so that they wouldn't be decaying. And so I rolled those to a higher strike further away from the money and picked up some more credit. So we'll analyze that, and we can look at the difference on here now. It really didn't impact our theta at all. It did impact well, it's hard to tell because it varies so much that this is really kind of irrelevant. But you can see now this is the one that we rolled. Before we roll it, we got a knee right here at the 4,400 right here. And when we roll that up to the 4,425, that bend goes way up here. So our risk to the upside gets greater, of course. You can see how that took that knee out of here at the 4,400. And it's way up here now where that knee is. But these are really on here just to manage the margin on the trade, the buying power, and not that we're trying to make money on those calls. But here I picked up about $300 on this call and put that in the bank. All right, so let's do that again about the same time with the other calls. And so we picked up another $180. There's 3 of them times 60, $180. And it hasn't impacted we had $69,000 of buying power before we started doing that. We had a slight, well, $6,000 or $7,000 of increased buying power for that, but we made some room by rolling that call up. So we're okay still. And we're still towards the profit of this tent here. Now, one of the things that I want to show you, I'll go ahead and put these other trades in. I went ahead and rolled the put up to actually increase the buying power again. And this is at, let's say 1020. 1020 is right here. And the price is now 43.78. So let's go back up here. So we're continuing to go up. And so what I'm doing is I rolled those puts up in anticipation that I might have to do rolling some puts back up from down here all the way back up over to here to balance it out. So I wanted to free up some buying power. So that's why I rolled this next put. And let's copy this in here. And that brought my buying power from 76,000 down to 67,000. So that helped there. And then we went ahead and did that roll. So the roll's at 1025. We look at the time on here. 1025 is right here, and we're at 43.77. So it went down just a hair from there. But what happens is I put this price in, this next roll in at $19 when it was quoting about 2021. And it's quoting 2021 when the price was way up here. And so when it pulled back, it allowed me to fill this for more credit. And so by me filling that roll at a higher credit, it, of course, lifts my whole profit curve up higher. So now that I have that $19 of additional credit, I'm back centered on my tent. I have a nice wide range of potential profit. I'm going to go ahead and roll another call back into it to try to get this credit or the buying power reduced. It's $93,000 now. So I'll do this roll. And it knocked my buying power down to 72,000, but it also knocked my delta to where it's very positive. So I'm expecting this price to move up. And if it doesn't move up, that was a bad move because it's real easy to drop it down and lose all the profit I've made so far. And so getting a little nervous about that. And I wanted to build my my closing order. So what I do when I build my closing order is I go back in there and I figure out how to close all my shorts. So my short strikes from all these different rolls come out to this right here. These are my short strikes that I have. And right now that's the current quote for it. And I got to figure out what price I want to close this at. Well, one of the ways I do that is I try to figure out what price I would have sold all these puts for. And I do that by trying to this line right here at 0. This line, the blue line, back up to here. And so what I'm going to do is I'll set that to, and I don't know what number it was. I'll just try this and see what happens. Okay, so that was a good guess because I'm only $15 off. You see the $15 right here? When I move my cursor on this chart, this is going to show me where that cyan line is. And so I'm going to raise my debt just a hair because that now I got it to 0. So I'm going to assume that this is the price of the credit that I made for all these shorts with all this trade that's happened so far. And I'm going to go back over to here and I'm going to use my handy dandy calculator. And I'm going to put this in here, 55.05. And I'm going to look at, let's go back on here too and take a look at this second trade. First trade we did for $21.95. That was a 43.40. Next one was the 43.55. 355. And that was for $21.95. And if I'm doing this correctly, this formula should be sum of these numbers right here. So I could put 43.80 here, and when you add these numbers up, the 990 and 990 on these two trades, it doesn't come out to 1320, and it could be this reason. Yeah. Okay. So that would be the. I'm looking for $1,965 is what I'm looking for because of these two tranches. But I made all these adjustments. So now what do I do? Because this number is really irrelevant in the total column. So I'm going to use the tranche 3 for my new accumulated position. And I'm going to go down to here. And I'm going to put in here 55.05. 55.05. And then I'm going to say, okay, well, I'm going to put a profit target of $49. Let's put this back at 15, this at 30 again. $46.80 and $71.55. But if I look at this now, this number is greater than the sum of these two. And I don't want this number. I don't want to be looking for more profit. I actually want a little less profit because I want to get out of this trade. I've had to make a lot of adjustments. It's been moving. So ideally 1870, something like that, 1880 for the combination of these two trades right here, or 1980, I guess it is, but not that much. So what I'm going to do is I'm going to lower the profit target to, let's say 10% and like that 20, and that's not enough. That's 16. So let's try 12. There's 1980, and we'll do 24 here. So I'll use these numbers right here as my stop loss, and I'll use this for my profit target, and then I'm getting about the same profit as I got there. Now I may want to raise this up and say, well, maybe I want to get out early. I'd be happy with 1,500 today. So maybe if I want the numbers from that, maybe it's 9 and 18. So I'm just playing with these numbers to get what I want. That's about $1,500 profit. So maybe I'll set my profit target at 1510, and my stop loss is 64.95. If we look right now, the market's trading at 63. So I'm going, well, that's too close to what I want, to what I'm looking for. And so let's go all the way to 1115 on here. 1115 is here. Here's a 1045. 11. So we continued going up here. Here's 1115. So we're all the way back up to let's step it back one bar back. So we're all the way up to 43.84. So I'm going to change this price down here to 43.84. And I'm going to go back and uncheck this box so we can see really where we are. And you can see now that, it did move right up towards the center of our tent. This profit would be if I was still in it today, but I've already closed it out earlier, and it closed it for about half that profit. So I would have been lucky if it was at that price at close, but we can see what happened. Let's go see what it is at close, or where it is right now. So you can see that it's fallen off that price and it's gone down to 43.60. So if I save in that trade at 43.60, I'd be at a loss right now of $3,500, almost $4,000. So you can't use where I was as the ideal. I got out when I needed to, and I took my profit, and that's a good thing at any time. So we were close to the high right here, and you can see at 11:14:09, someplace right around here, I took my profit and got out of this trade, and boom, it crashed down. So I'm glad I did. So let's go back to 43.85. 85. And we can see it's close to the center of my profit tent. And what is this price right now? This is 63.80. 63.80. Close to the stop. Why didn't that adjust yet? Did I miss it? Oh, sometimes you have to hit enter or something to get that number to take. 43.85. Well, it's a 43.85. Maybe this is probably reflecting what the current price is right now. But what happened is that I tightened this up a little because it was a 50.10. And you can see right here that I actually closed this for the 52.40. So I can change this to 52.40 because that's actually what it filled for. And I'll add that into my chart here. And then you can see that either I screwed up here, because that's not what the profit looks like. Let me reload those in. I might have said something wrong, missed something on here. Import trades, and I'm going to import the ones that I saved today. It should be, which I probably should have deleted all these first. Go back and import them. Okay, so we should have the same trades that we had in there. So the 21.85 is the first one, 21.95, 15.18.60, 30.20.60, 105.60, 10 cents. After 10 cents, we got 19.22, and then the close, the 50.40. And let me take all these off since we hadn't really got there yet. So this is showing, this blue line is showing actually what the profit is at expiration, and the profit right now is showing a little higher, but we had to close all these long calls and got some credit for those, and so now our line's flat, and we ended up the day with $1,545 of profit, and we're out of the trade. And good thing, because the market is a long ways from where we got out to down to here, so we would have lost most of that. We would have lost all that money. And so what's amazing on it is when you set up a fly, you're setting up a fly as a price target, and we put the price target right where it was trading, way down here at 43.40. Yet we had a massive move up, which is more than a 2x, a 1 standard deviation move up here, and we were able to still make our profit with that kind of move by making those adjustments. I hope that helped you to understand what we do on this trade, and we'll catch you later. Bye.